Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Good morning. I still feel like my microphone's a little soft, but whatever. It's okay. Well, this morning they had the ECB announcement about 30 minutes ago, and you can see, yesterday we were around 130. We've gone up to 11. So, I'm guessing that the stimulus that the ECB was expected to bring out either didn't happen or was not as strong as we thought, right? But the first thing that I'm noticing is that there is not a lot of liquidity on the ES, which means that it was rollover day, huh? Yes, it was. Rollover. Rollover. So we want to go to December. Ugh. December is not much better. No, it is not. Well, okay. But it is rollover, right? European Central Bank acting quickly cuts rates 10 basis points. They are trying and succeeding in depreciating the euro against a very strong dollar, hurting the U.S. exports, and the Fed sits, gets paid to borrow money while we are paying interest. I see. So maybe our bonds are moving up because the ECB eased, and so we're seeing demand over in U.S. Treasuries. Is that what's going on, huh? Now, this provides a difficult trade because overall this week, this is overall this pushes things up though, so we could buy potentially, but there's going to be a press conference in 10 minutes, right? And that can be very, 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 very difficult trade because it depends on what he says, right? So it's probably best for me to just stay out. I want to see here. So in ES opened up the night significantly higher, is pulling back, but is still doing okay. 10-year moving up. Well, this is very interesting. Mnuchin says 50-year bond very seriously considered for next year, if not if the quant crash continues. Right. I would really love to see a 50-year bond, though. Just from a trading perspective, I don't know about the effect on the economy, but from a trading perspective, I'd really like to see it. Should we turn on our robot reader girl? Why does it always want me to go to this one? All right. Maybe while he's talking, we can make some changes to it so that it doesn't read out stupid things. See, here is a potential long spot for sure, but I don't know. It's not actually giving me enough of a spike. A little questionable. Okay. Anyways, what else we got? The ECB executed a dazzling bait and switch. A month ago, Bank of Finland leader Olli Rehn said it was important to come up with a significant and impactful policy package in September. When you're working with financial markets, it's often better to overshoot than undershoot, and better to have a very strong package of policy measures than to tinker. The euro slumped on the headlines. The problem was that after you say something like that, market participants adjust, and that makes it tougher to surprise. So the ECB went on a coordinated disinformation campaign. Speaker after speaker over the past month went on the offensive. Not said that there was no need to resume QE. Weidman said the same, and others spoke along the same lines. A series of leaks continued right up until the decision that suggested QE might not come. That set the stage for Draghi to deliver a surprise of open-ended QE and an open-ended guidance. He didn't deliver the 20 basis points in cuts that some were hoping for, but he may yet hint at in the press conference, so stay tuned. Eurozone bonds yields are down sharply across the curve, with Italian 10s leading the way, down 17 basis points. As for the euro, it's down 40 pips. I see. So, the ECB was more dovish than expected. Mario Draghi's farewell press conference. Here we are. Oh yeah, we get that nice ECB music. Love it. I'm a little afraid that I might, I'll turn it down. I think we didn't have a problem last time, but I'm gonna turn it down. Um.
YouTube, Greg Orlovsky, 2 minutes CPI.
Oh, yes, that's a good point. What are we looking for on the CPI news? This week. We're looking for a reading of 0.1 and a core reading of 0.2. So our liquidity is already pretty light. Yeah, it's already pretty light. I'm trying to take an as she goes trades on this one. It's probably not going to work out as well because of the liquidity. So we're just going to wait. I'm sure it's going to get even worse here in a second. I'm a little unhappy about the ES the liquidity too. The link for the ECB press conference. Yes, sir. Okay, now they've really pulled. Wow. Boom. Okay. So that must mean higher than expected. I got spot 1 on the CPI versus an expected spot 1. And spot 3 on the core CPI. Now remember, core CPI is the change in the price of goods and services purchases by consumers, excluding food and energy.
YouTube,
so that's the one that
Winstanzamam, good morning.
matters.
Speculator saith I am preparing home for himself and his return from walkabout. I will not play or observe today. Is your date correct, or am I looking at an old stream?
No, the date is correct. The way that you can tell that it's correct is it'll say that it's a live stream, right? Although, why is it saying that it's the 9th? I guess I forgot to change it a few days. So there, we'll fix that. The debate is tonight, right? We're going to see you for the debate. Well, this is kind of really messy action here, isn't it? That's funny. The top result for Democrat debate right now is Al Jazeera. One night only. Houston, Texas, from 7 to 10 p.m. local time, which means 6 o'clock my time. 8 o'clock Eastern time. Ooh, it's hot in here. So that was interesting. They had that little gappy move down, and then they pushed up a little bit. They actually pushed higher than the last swing, even though the number was higher than expected.
YouTube, Winstanzamam, happy trading today. Yes, if you livestream, I will be there. Should be interesting. Sexy robot voice say Seth and Ace are the king overlords and Greg is the emperor while Algo is the wizard.
That's great. Oh, now look at this.
YouTube, Winstanzamam, a more fatty gentleman.
So there was a really big order there at 08, and they actually filled him. Here they are walking in. Because it's a press conference, and I've screwed that one out so many times. I'm not going to get in, but that would typically be a buy in that kind of action. Okay, they're walking in now.
YouTube, Greg Orlovsky, super thin.
Yeah. Well, they got back up to thousands here, but like this 3,000, there was 5,000 there at that level. Yep. And there was 5,000 there. It was at 08.
President and I are very pleased to welcome you to our press conference. We will now report on the outcome of today's meeting of the Governing Council.
Oh my.
Based on our regular economic and monetary analysis, we have conducted a thorough assessment of the economic and inflation outlook. Also taking into
Interesting
account
that I'm not
the
getting
latest
anything here in the level 2 though.
Projections for the euro area.
Probably because it's moving too fast.
As a result, the Governing Council took the following decisions in pursuit of its price stability mandate.
Getting it in the
First,
the 5-year though.
As regards the key ECB interest rates, we decided to lower the interest rate on the deposit facility by 10 basis points to minus 0.50%. The interest rate on the main refinancing operations and the rate on the marginal lending facility will remain unchanged at the current levels of 0 and 0.25% respectively. We now expect the key ECB interest rates to remain at the present or lower levels until we have seen the inflation outlook robustly converge to a level sufficiently close to, but below 2%, within our projection horizon, and such convergence has been consistently reflected in underlying inflation dynamics.
Did you hear that, Mr. Powell? That's what the market wants to hear. That's what they want to hear. Why can't you say that?
Net purchases under its asset purchase program at a monthly pace of 20 billion euro as from November 1st. We expect them to run for as long as necessary to reinforce the accommodative impact of our policy rates and to end shortly before we start raising the key ECB interest rates. Third, we intend to continue reinvesting in full the principal payments from maturing securities purchased under the asset purchase program for an extended period of time past the date when we start raising the key ECB interest rates, and in any case for as long as necessary to maintain favorable liquidity conditions and an ample degree of monetary accommodation. Fourth, we decided to change the modalities of the new series of quarterly targeted longer-term refinancing operations, TLTRO 3, to preserve favorable bank lending conditions, ensure the smooth transmission of monetary policy, and further support the accommodative stance of monetary policy. The interest rate in each operation will now be set at the level of the average rate applied in the Eurosystem's main refinancing operations over the life of the respective TLTRO. For banks whose eligible net lending exceeds a benchmark, the rate applied in TLTRO 3 operations will be lower and can be as low as the average interest rate on the deposit facility prevailing over the life of the operation. The maturity of the operations will be extended from 2 to 3 years. Fifth, in order to support the bank-based transmission of monetary policy, the Governing Council decided to introduce a two-tier system for reserve remuneration, in which part of banks' holdings of excess liquidity will be exempt from the negative deposit facility rate.
Alligator, just below R2, somebody thinks it's going to pull back.
With further details of the measures taken by the Governing Council will be published this afternoon at 3:30 p.m. The Governing Council reiterated the need for a highly accommodative stance of monetary policy for a prolonged period of time and continues to stand ready to adjust all of its instruments as appropriate to ensure that inflation moves towards its aim in a sustained manner, in line with its commitment to symmetry. Today's decisions were taken in response to the continued shortfall of inflation with respect to our aim. In fact, incoming information since the last Governing Council meeting indicates a more protracted weakness of the euro area economy, the persistence of prominent downside risks, and muted inflationary pressures. This is reflected in the new staff projections, which show a further downgrade of the inflation outlook.
At the
same time, robust employment growth and increase in wages continue to underpin the resilience of the euro area economy. With today's comprehensive package of monetary policy decisions, we are providing substantial monetary stimulus to ensure that financial conditions remain very
some big
favorable
absorption there at 12.5.
and support the euro area expansion, the ongoing build-up of domestic price pressures,
my back is really messed up. I'm
and
gonna try and
thus
straighten
the
it out.
sustained convergence of inflation to our medium-term inflation aim. Let me now explain our assessment in greater detail, starting with the economic analysis. Euro area real GDP increased by 0.2% quarter on quarter in the second quarter of 2019, following a rise of 0.4% in the previous quarter. Incoming economic data and survey information continue to point to moderate but positive growth in the third quarter of this year. This slowdown in growth mainly reflects the prevailing weakness of international trade in an environment of prolonged global uncertainties, which are particularly affecting the euro area manufacturing sector. At the same time, the services and construction sectors show ongoing resilience, and the euro area expansion is also supported by favorable financing conditions, further employment gains, and rising wages, the mildly expansionary euro area fiscal stance, and the ongoing, albeit somewhat slower, growth in global activity. This assessment is broadly reflected in the September 2019 ECB staff macroeconomic projections for the euro area. These projections foresee annual real GDP increasing by 1.1 in 2019, 1.2 in 2020, 1.4 in 2021. Compared with the June 2019 staff macroeconomic projections, the outlook for real GDP growth has been revised down for 2019 and 2020. The risks surrounding the euro area growth outlook remain tilted to the downside. These risks mainly pertain to the prolonged presence of uncertainties related to
longer opening
factors,
statement than normal.
the rising threat of protectionism, and vulnerabilities in emerging markets. According to Eurostat's flash estimate, euro area annual HICP inflation was 1% in August 2019, unchanged from July. Lower energy inflation was offset by higher food inflation, while the rate of HICP inflation, excluding food and energy, was unchanged. On the basis of current futures prices for oil, headline inflation is likely to decline before rising again towards the end of the year. Measures of underlying inflation remained generally muted, and indicators of inflation expectations stand at low levels. While labor cost pressures strengthened and broadened amid high levels of capacity utilization
come down here.
and tightening labor markets,
They definitely overextended and are
pass-through to
flipping.
inflation is taking longer than previously anticipated. Over the medium term, underlying inflation is expected to increase, supported by our monetary policy measures, the ongoing economic expansion, and robust wage growth. This assessment is also broadly reflected in the September 2019 ECB staff macroeconomic projections for the euro area, which foresee annual
Euro definitely got
HICP
hit
inflation at 1.2
YouTube IQ
this
GM.
year, 1
morning.
in 2020, and 1.5 in 2021. Compared with the June 2019 staff macroeconomic projections, the outlook for HICP inflation is being revised down over the whole projection horizon, reflecting lower energy prices and the weaker growth environment. Turning to the monetary analysis, broad money M3 growth increased to 5.2% in July after 4.5% in June. Sustained rates of broad money growth reflect ongoing bank credit creation for the private sector and low opportunity costs of holding M3.
seeing
The
something
narrow
weird going
monetary
on in the
aggregate
30-year
M1
right now.
continues to be the main contributor to broad money growth on the component side. The annual growth rate of loans to non-financial corporations remained unchanged at 3.9% in July 2019. The annual growth rate of overall loans to non-financial corporations continues to be solid, although short-term loans, which are more sensitive to the cycle, show signs of weakness. The annual growth rate of loans to households stood
Donald
at
Trump, it is
3.4
expected
in
the China will
July,
be buying large
after
amounts of our
3.3 in
agricultural
June,
products. That would be super
continuing
good for
its
everybody.
gradual improvement.
Now we're seeing
Overall, loan growth is still
big movement
benefiting
here in the
from
30.
historically low bank lending rates. The monetary policy measures we've taken
It's gonna
today,
push it up.
including the more accommodative terms of the new series of TLTROs, will help to safeguard favorable bank lending conditions and will continue to support access to financing, in particular for small and medium-sized enterprises. To sum up, a cross-check of the outcome of the economic analysis with the signals coming from the monetary analysis confirmed that an ample degree of monetary accommodation is still necessary for
YouTube
the
Wimmer
continued
Kevin, why are you using the new
sustained
contract in
convergence of
SMES?
inflation
It
to
has far
levels
lower
that are
volume than the
below
September
but close to
contract.
2% over
Yeah.
the medium term.
Well, I knew
order to
I
reap
came in
the
and I
full
saw that the
benefits from our
September
monetary
contract was
policy
pretty low
measures,
liquidity.
other policy
So I
areas
was like,
must
oh, it's
contribute
rollover
more
day.
decisively
So
to
I rolled
raising the
over.
longer
Now
term
there's a
growth
lot less
potential.
liquidity. My take is I'm
Supporting
just not
aggregate
going to
demand
trade
at the
ES
current
today.
juncture and reducing
So I might as well
vulnerabilities.
keep it on the new
The
contract though.
implementation of structural policies in the euro area countries needs to be substantially
Because I'll have
stepped
to
up
switch
boost
to it tomorrow no
euro
matter
area
what, right?
productivity and growth potential, reduce structural unemployment, and increase resilience. The 2019 country-specific recommendations should
Either way
serve
though, when the
as
liquidity is
the
that low in
relevant
ES, I don't
signpost.
think that that's something I want to be involved in.
Regarding fiscal policies, the mildly
Treasuries, I can get away with it
expansionary euro
sometimes.
area
YouTube
fiscal
Algo
stance
Lover GM
is
winking
currently
face.
providing
Good morning.
some support to economic activity. In view of the weakening economic outlook and the continued prominence of downside risks, governments with fiscal
YouTube Algo
space
Lover note,
should
I'm still
act
quoting ESU
in an
19
effective
Sept contract
and timely
thumbs up.
manner.
Okay.
In
You know, it's
countries where
interesting,
public
by
debt
the
is
way, guys.
high,
His
governments need
Algo
to
Lover's
pursue
little
prudent policies
call yesterday
that
in the
will
10-year.
create the conditions
YouTube
the
for
Algo
chart.
Lover
automatic
8:26 a.m.
stabilizers
Algo Lover
to
S
operate
if buyers hold
freely.
this pullback above
All countries
2991.50
should
then
reinforce
3027
their efforts to
target if
achieve a more
2991.50 fails before
growth-friendly
that target
composition
trades
of
then
public
anticipated
finances.
deeper pullback nerd face.
Likewise, the transparent and consistent implementation of the
It's often the day
European
after,
Union
so for
fiscal and
tomorrow it's
economic
possible that the
governance
old
framework
contract
over
still has
time
more
across
volume than the new one.
countries
Really
remains
interesting.
essential to bolster the resilience
Well,
of the
anyways,
euro area economy.
here in the 10-year, remember that
YouTube
Algo Lover
Algo
said
Lover
22.
CN if sellers hold this squeeze below 130, 250, then anticipate another down rotation. A bid back above 130, 250 would be bullish nerd face.
And urges further specific
25,
and
really.
decisive steps to
It's just interesting. Yesterday, I thought, oh, they're never going to make it to 22, but then overnight they did do it and reversed afterwards. Was kind of interesting.
Piotr Skolimowski.
Now they're asking questions.
Good afternoon, Mr. President. My first question would be about the dynamic in the room, because going into the meeting, we've seen quite a vocal opposition, especially to the...
I'll turn it down just a little bit.
So probably me and the others
Maybe
would
not
like
that
to know
much.
how
There we
much
go.
support each of the
I don't like
instruments
ZF lag at the moment.
eventually
Need it to
adopted
pop up
got,
or it
and
will
was there,
reverse.
how much support was there for it? My second question is specifically about your APP program, because it's effectively a program that's open-ended. It starts from November, which basically means you will end up buying bonds or assets.
YouTube Algo Lover. It happens when they say, not me, zipper mouth face with tears of joy.
Have you considered
Right.
changing limits or adding other assets to the program? Thank you.
Well, it ended up being really useful yesterday, even though it didn't get to your target. But I got lucky. I got out at +8, and that happened to be where it
Let me
turned.
just spend a word trying to explain what we have actually done. I think, as I kind of sketched in introductory statements, there were three elements that prompted action. Along lines, by the way, that you would find in my Sintra speech. First of all, and again, if anything, after Sintra, the case became even stronger, because the protracted slowdown in the Eurozone economy is actually more marked than expected, and that's the first element. The second element is the persistence of downside risks of trade nature, but also geopolitical nature in the Eurozone. And by the way, our baseline scenario that actually contains the third reason for acting, namely the downward revision in projected inflation, with the inflation expectations at this low level and the current
YouTube Wrong ZH
muted,
morning.
this baseline scenario
good morning,
is
Wrong.
relatively favorable, because it doesn't contain the case of a hard Brexit, for example, the probability of which has gone up over recent time, and it doesn't contain some of the trade measures, trade escalation at least, some of the trade escalation that's taken place since August. So in this, with this relatively favorable baseline scenario, there was a downgrade in inflation and inflation expectations. And so that's over the whole horizon. And that's what prompted the measures we've taken. And let me just spend a word explaining them, and then I will answer your points more specifically. First of all, the lowering of the DFR, the deposit facility rate, together with the reinforced forward guidance, operates all throughout the yield curve, especially in the
YouTube
short
Algo
and the
Lover. This
medium-term
specific
segments.
algo trades 24/6, so whether we're
And
around
then
or
you
not,
see
it's
that
doing
there is a
business
different
okay
forward
hand.
guidance today. It's a strengthened state dependent. There is no more calendar dependence. And this should give a pretty good guidepost, pretty clear guidepost for rate expectations by linking our policy to more stringent conditions for the inflation outlook. Over our projection horizon, projected inflation.
Well, it's interesting
will not
that
only need now
you're
to
saying all the way up
converge,
to
but
25,
also,
because
as
I'm
I
sitting here
think
looking
I
for
read in
maybe a
introductory
spot where it
statement,
might turn down a
also
little bit more. And
stabilize around a level
if it's all the way up at
sufficiently
25,
close
that kind of
to
suggests
but
that it's
below
maybe not
2%.
worth looking for, huh?
The reference to levels sufficiently close to but below 2% signals that we want to see projected inflation to significantly increase from the current realized and projected inflation figures, which are well below the levels that we consider to be in line with our aim. our guidance would remain forward-looking, but at the same time,
He's reading that.
it contains elements that protect us against the risk of overreacting to transitory shocks of inflation, as well as against forecast and measurement errors, as we would emphasize that convergence should be robust. That's important. And also important is the reference to underlying inflation that will have to increase to ensure that the pickup in inflation is backed by a sustained build-up of domestic price pressures. I think that's the explanation of the first few elements of today's decision. Now, I can also give you an explanation of why the restarting of the APP is appropriate, but we can defer this to the next question, perhaps. And let me now move to the other.
It really came down there.
Point. Your first question was about the chemistry of the meeting. Let me start. First of all, let me start from one thing about there was unanimous consensus, namely that fiscal policy.
YouTube, Algo Lover, I'd anticipate they'd attempt to bid up to at least 13.
It's quite clear.
Well, they did get to
in order
13, didn't they?
raise demand in an effective and timely, and that's, you've seen the language of the introductory statement after many years, I think, of being more or less
I don't know. It doesn't really matter. And I'd say until after the E-mini opens, I'm just kind of hands off.
And if you see also, if you
because it always turns into, just like this is here, it's moved down. Okay, 23 is okay, but it's very dependent on what he says, and there's no way to predict that. So it's better to just not touch it.
YouTube, Algo Lover, 130, 170, but 130, 250 is line in sand, okay hand.
All the things that you see in Europe, the creation of more than 11 million jobs over a short period of time, the recovery, the sustained growth for several quarters.
Now, what about on the downside? Would it have to go below the overnight low to invalidate that?
Structural reforms in some countries. So now it's high time, I think, for the fiscal policy to take charge. Second, there was a broad agreement on the parts concerning forward guidance and the rate cut. And
YouTube, Algo Lover, I'm offering the playing field. Trade it or not. Always your call, okay hand.
That part was by and large agreed. And then there was, of course, more diversity of views, as it was vastly pre-announced by statements on all newspapers, wires, television, and so on. There was more diversity of views on APP. But then in the end, the consensus was so broad there was no need to take a vote. So the decision was, in the end, showed a very broad consensus. As I said, there was no need to take a vote. There was such a clear majority that. So let me now say one word about where the main differences actually lied in the discussion. I think there was, again, a full agreement about the need to act. But the difference of views were about the severity of the outlook. In other words, the majority of the Governing Council believed that the outlook was deteriorating as I said, in a way greater than expected, and the revision in the growth and inflation projections granted full action. Others viewed this deterioration with a little more caution. Second point was about the need to act now. As usual, you have always views that say, let's wait and see. And the Governing Council decided to act now this time. And the third is about the appropriateness of the APP. By the way, one reason also to act now concerns inflation expectations.
It's kind of hard with this press conference because a lot of the acronyms and things that he talks about are things that I'm not as familiar about because the U.S. media just doesn't talk about them.
Which is not our aim. That's why the Governing Council, in full consistency with its mandate, did decide to act now. And it's now, and the package is quite powerful, both in the short run, but also in the long run, in designing action over the coming months. So the appropriateness of these instruments, because some think that the APP is appropriate.
This is giving me a potential buy around here.
YouTube algo lover question: if all traders are supposed to have a plan of attack, why wouldn't the largest in this game have one? Thinking face.
On the APP, but the majority of the Governing Council believe that action was warranted, and
I think the problem in a situation like this is that. You could have 2, 3, 4 equally large big guys with different plans of attack that are difficult to decipher. Probably not right now, though. Probably they sit until after Draghi is done talking and then decide what they're going to do.
A long time at this rhythm, without the need to raise the discussion about limits. I think I will stop here.
Ms. Weisbach? Annette Weisbach, CNBC. Let me take your point on the length of the program and also how long you think those measures are needed, because I think one of the surprising elements of the proposed package was that the APP comes in with an unlimited amount of time, right? So what are you expecting? How long does this need to prevail in order to really get inflation back to target? And in your experience, how much effort does the central bank need to do in order to re-anchor inflation back at where you want to have it? And then another question is, did you discuss also to move the marginal lending rate into negative territory? And is that an option which could be a next step? And why didn't you do it?
YouTube algo lover agreed, but in every arena, there's a winner.
Thank you.
Yeah.
Grinning face.
If you can determine who the winner is, for sure.
We really think this package is adequate to re-anchor inflation.
I think one of the mistakes that I made a lot early on was I found that I could tell if there was a large player in an area I could just tell at that time. Sometimes it's hard, but I remember at that time it was very distinct, like, oh, there's somebody really big here. And then it would go up and it would run into somebody else really big. And I always seemed to think that I knew which one was bigger, and it wasn't, because, there could always be more volume behind it,
Whether we discussed, no, we didn't.
And you got to know which times you actually have a call on that and which times you don't. With this ECB thing, it's hard because I think definitely I don't see why anybody would come out after this and be like, okay, well, we really, really want to sell this hard, right? But so they're going long, but the question is, how long do they want to go?
Did you also discuss higher amounts of monthly purchases before your final decision?
I'm sorry, the answer is that I can't tell you the numbers. We never did it. We're not going to do it. Just to let you know that there was no need to take a vote, as I said, because there was such a significant majority. The second point is no.
YouTube algo lover don't need to know the who, what, why, just that there is in respect at nerd face.
I think it matters why, because you need to know how significant of a move it actually is. Because if it's just a short-term little 5-minute thing, then you can potentially fade that. And if it's not, you definitely don't want to get in the way.
Of the QE, the type of assets that you're planning to purchase, and can you also talk about helicopter money? And what's your view on whether...
If you understand why the big players are making the move that they are, it's a lot easier to predict how they're going to do it and what prices are safe to trade.
No discussion about the type of assets, meaning that by and large it's going to be the same we purchased in the past. we purchased in the past. Now, with helicopter money, I got to be very cautious, because last time I was asked this, about a year and a half ago, I said, well,
YouTube
maybe an
algo
interesting
lover,
thing, but
okay
we haven't
hand.
discussed. And immediately everybody said, oh, they are talking about this and studying. No, we are not talking. It's not been discussed. It's not an option that we considered.
Mr. Warney?
YouTube algo lover, gotta run, HAGD.
President, you will
Thumbs
see
up.
if I read your tweet.
Catch you later.
It's from Donald Trump.
Yes, I've seen.
They're gonna make him address Donald Trump's tweet. Let's
European
see.
Central Bank acting quickly cuts rates.
YouTube
10 basis
Michael
points.
XC,
They are
what's
trying
helicopter
and
money?
succeeding in depreciating
Hold on, let's
the
listen to
euro
this
against
question.
a very strong dollar. It's all capital letters, hurting U.S. exports. And the Fed sits and sits and sits. They get paid to borrow money while we are paying interest. So I would like you maybe to comment this. And second, you know that in Germany there is a very strong discussion about banks and negative rates on deposits and their intention to transfer these negative rates on retail clients. I wanted to know if you have an opinion on this, and so that's my two questions. Thank you.
Thank you. Now, the first question, I, in a sense, answered to the first question on the occasion of the first tweeter. And the answer is very simple. We have a mandate. We pursue price stability, and we don't target exchange rates. Period.
Well, there you go.
On negative rates, I think today I have said several times, negative rates have been a quite very, actually a very positive experience in terms of stimulating growth, sustaining inflation. But it's quite clear, and I did say this several times, that they have side effects, and they have negative side effects. And it's not so much that we want to protect bank profits. That's certainly not our mandate. But it's that we want to protect the smooth transmission of the lending channel. We should never forget that the European economy is a bank-based economy, that lending goes through banks. And we want to protect the transmission of our monetary policy through the lending channels. And I think that's the philosophy behind the tiering measures, the mitigating measures that we have discussed and approved today. Thank you.
Mr. Stoll?
So when they talk about helicopter money, they're referring to kind of an inside joke where when quantitative easing was first proposed by Ben Bernanke, everybody started calling him Helicopter Ben because he was just going to basically throw money at the market from a helicopter. So that's a joke. So when they're talking about helicopter money, they're talking about central banks buying assets like stocks through quantitative easing.
Of the chief economist. The proposal of the chief economist, and this proposal did not.
It's interesting that he says, "Well, we don't target the interest rate," but it's kind of like, I don't know. This is kind of getting into a really strange area because we have clearly run into a spot where our current monetary policy simply cannot handle where we've gotten to, because you can't, like, if the ECB lowers and then everybody comes over to the US and buys things, it buys our bonds, and it screws up, it screws with everybody. And it doesn't make a lot of sense for the United States Federal Reserve to hold a significantly higher interest rate than the Eurozone, right? But they're both supposed to be targeting price stability. And in the case of the United States, they're also supposed to be, maximum employment. They're not supposed to touch those things, but it seems to me that it would help for monetary policy to be informed by those sorts of things. And I think one good example of where this sort of thing is likely to cause problems is the the phenomenon of negative interest rates, because negative interest rates, it's basically like depositors are willing to lose money and give it to the government, because the yield is so low and they would rather do that than lose it, which is kind of scary. And the problem with that is that then you end up with more of the economy being done by the government, which is very, very bad for growth. You don't have as much investment activity at that point because of that. And so it hurts your recovery. And then you run into what he was talking about there, where banks basically don't see any reason to lend because they're just, even if it's a negative interest rate, they're not going to give people loans, that are unreliable creditors or whatever. So I'm starting to worry that because of this disjointed, monetary policy and the fact that our current monetary policy just doesn't seem well equipped to handle the current situation that we are, that we're creating this feedback loop where we just stay in this situation forever. And the real problem is where that leads to, right? I almost hesitate to say it, but then they would have to coordinate. So how are you going to do that? You would have to have a single currency, and as that would mean world government type stuff, which would not be good for normal people. So yeah, I'm kind of don't like a lot of what I'm seeing in it, and I would be a lot better if we just got a trade deal with China and the world economy picked off and we had another leg in this bull market, Anyways, that's my spill.
The topic of the strategic review that the next president will carry out together with the Governing Council. The reasons why we, during my tenure, we always objected to changing the target. By the way, the reasons are different whether you go up or you go down. But there is one common reason, that when you change a target that you can't reach, the action is not very credible. If you can't reach 2, why do you want to go to 4? And if you and on the other hand, to change the other side would have other drawbacks. And so for a variety of reasons, so we've always refrained from changing this. But this, as I said, is going to be one of the topics of this strategic review.
Ms. Laird?
Thank you. I've got 2 questions, Mr. Draghi. The first is the asset purchase program was a little bit more hawkish than private economists expected. Your forward guidance was a little bit more dovish. Is that aimed at giving your
YouTube Michael XC, good spiel, thanks.
Flexibility, including on rejigging or reconsidering any kind of purchase limits? The second question, if you'll forgive me, if we could go back to the tweeter-in-chief, would any efforts by the U.S. to directly or indirectly weaken the dollar complicate your goals? And do you have any specific reaction planned should the U.S. intervene to weaken the dollar?
The answer to the first question is that we take our decisions really not with the idea of creating kind of a ground for my successor, but we've taken our decisions, as I said at the beginning, on the basis of objective elements that have to do with a weakening of the economic outlook, a weakening that is more serious than expected, and with the revision in the inflation projections, and with the persistence of uncertainty. So that these are the elements at the basis of our decisions today. Now, on the second question, we stick with the G20 consensus, namely that we will never pursue competitive devaluation. So we expect that all the G20 members would underwrite the same consensus.
Mr. Wieber?
Yes, Mr. President.
you, Mr. President. I was quite surprised that a lot of economists who didn't talk that way and in the past are now changing their opinion and are questioning whether the side effects of the monetary policy, the negative side effects, will sometimes very soon
It looks like
be
they bought
bigger
this
than the
bit.
benefits. So do you see any point in the future where this could happen?
I think that this concern is very well placed. I think we should be aware of the side effects of our policies, be there interest rates or asset purchases.
This kind of concerns me.
And we are monitoring. We are closely monitoring the side
Notice
effects.
this.
The Vice President, through its Financial Stability Action,
And this.
is closely monitoring all these effects.
So where do these line
So
up with?
we are keenly aware. Now, to many of these side effects, the answer is not
So
to change monetary
the
policy,
big guys sold
but
this,
rather implement specific
and
macroprudential
the small guys
policies.
bought this.
But as I said, this is it's been a constant.
So do we have a case where
point of
the
action,
retail
constant
traders
point
have
of
bought
concern.
into 08.5 and the larger players are going to sell it on them?
Isabella Bufacchi from Sole 24
It's not a
Ore. I have
guaranteed
two
setup
questions.
because of
One
him
is
talking and
on
everything like
one
that,
of the
but
actions today on
I've
Treasuries,
never
because
seen
they're,
something quite like
It's
that.
being, I think, more than the market expected. They're longer, and there is not the 10 basis point on the top. And this is even before the TLTROs are in place. So is there a worry, preoccupation that loans are not really going to, especially SMEs? And then my second question is on this statement on effective and timely manner for government with fiscal space. Today, a very important think tank in Germany saw a recession on the horizon of Germany. And what is your view on the risk of recession? And do you think that a country should act before it has a recession rather than wait to have it to change the fiscal policy? Thank you.
Thank you. Well, when we approved, the first question is about TLTROs. When we approved the TLTROs, basically, if I remember correctly, there were two criteria. The first was to ensure that our monetary policy would be transmitted through the bank lending channel. And the second would be that those conditions would be dependent on the macroeconomic outlook.
If they start hitting into
which
like
has worsened
06, I
since
think
we
I want to
approved the
get
TLTRO,
short.
and therefore, there has been an adjustment in the TLTRO's conditions. The second point is about recession. We still think the probability of a recession for the euro area is small, but it's gone up. But still, we believe it's still a small probability. While with respect to Germany as such, well, we've seen today two business cycles institutes saying that it's either a recession already, or they foresee a clear recession, or it's about to get into a recession. I'm not, and so that's a case, but that's a case for timely and effective action on the fiscal policy side. By the way, let me say something I've said many times.
Okay.
It's in a sense easy to make recommendations to governments to do this and to do that. So in doing so, and you know this, I've said this many times, we've got to be extremely humble. It's something that we should say because the instruments ought to be activated. As I said, everybody was unanimous about that today. But we should also be aware that there are objective and specific difficulties about doing this in different countries, by the way.
Mr. Bonderman? Thank you. This is a follow-up question to one of the questions of my colleagues about negative side effects. Your proposed successor, Christine Lagarde, also said in the European Parliament she wants to look more closer at the concerns of citizens about negative side effects of the ECB's accommodative monetary policy. And one of such side effects is, of course, the severe pressure on pension funds through continuing low rates. It seems increasingly likely that large Dutch pension funds will have to cut payouts. So were the pension funds discussed at the meeting today, and is there, in your view, a risk that monetary policy actually harms demand, since people will have less money in their pockets? Thank you.
Thank you. The answer to the last point is no. We haven't seen that. But we certainly are very concerned about the pension and the related services industry. And certainly this is one of the side effects. Having said that, it's quite clear that to the extent that negative rates prompt or speed up the recovery, they will also benefit pension funds and insurance companies.
A head and shoulders.
So, and the main point here is really negative rates are necessary instrument of monetary policy, and this is what the Governing Council has stated now for quite a long time. It has created a lot of positive effects. How do we speed up these effects so that interest rates can go up again? And the answer is, once again, is fiscal policy at this point. By the way, as a matter
fiscal
of fact,
policy.
I understand the Dutch government has a 50 billion investment program, and that's a good time to activate it. Thank you.
Mr. Huyton, please.
Luke Huyton, Market News. Mr. Draghi, can you say a little bit more about the motive for making the duration of the asset purchase program contingent on the first rate hike? And my second question was, you said that interest rates will remain at their present or lower levels until inflation not only converges, but stabilizes. Was the possibility or the desirability of inflation stabilizing temporarily above 2% discussed? Would you be against that?
Twitch, Jamieber 225, HEYY thoughts on uranium stocks? Not today trade, but medium to long term?
So we
that's a good question. If you hold on here.
It has been expressed. And the symmetry means that we react to...
Because I've actually been looking at this lately. It's funny that you asked that, because I'm normally not a stock picker, but I've been looking at those particular stocks.
Above our aim. It seems obvious, but evidently it needed to be restated. And so now, concerning the asset purchase program, let me just say a few things. First of all, it has a larger impact on longer-term rates and provides further support to the funding costs that matter for business and households. Also, with this formulation, the horizon of net purchases dynamically adjusts to changes in our interest rate forward guidance, and therefore works in the background to keep a lid on medium to longer term interest rates. So you see the two instruments interact together. By adding to the stock of assets and reinvesting for longer, we can postpone...
I'll tell you what, though.
Twitch, Jamieber 225, yay, I have as well. Company called Paladin Energy is in my option, very strong fundamentally.
So I've been looking at, because I'm really interested in next generation nuclear power. And so I've been looking at a couple of different companies. And uranium is always one of the good ways to play that. I think that there can be some issues with uranium because you're not just exposed to nuclear power at that point, right? You're also exposed to, just the larger economy and the intricacies of extracting ore, which is something that I don't really understand much at all. So for me, trying to make a play on nuclear power, I think it's better for me to go into a stock that's specifically about a new technology. But that's just me. But I'm not super focused on individual stock picks, unfortunately. I'm kind of more of a macro trader. So, what I see right now is that it appears like things are getting better, but the euro is being incredibly dovish here. So, I don't know. So it's kind of hard to make. And the other big thing that I'm noticing is there's definitely a play for value right now. Like everybody seems to be moving into the stocks that have kind of been hated lately and should be worth more, but aren't because they don't have the momentum or the the macro play. But the value names are the ones that are doing well right now. A lot of the banks, things like that. So if I was looking to make a play like that, I would try and pick the one that has the value. Make sense? Ooh, they really pushed that.
We approved today. We're trying to protect the transmission of our monetary policy through the bank lending channel from some side effects that the negative rates might have. That's one example of answers. Of course, there are
Please, want to feel
aware that go beyond banks, as it was asked to me a moment ago.
Mr. Jakisch?
Look at this Head and Shoulders, man. That was definitely a Head and Shoulders.
On the decrease of the deposit facility rate, I do very well understand that the governing council is not too much interested in the profitability of the.
I'm really happy that I took that.
But on the other hand, aren't you concerned?
Because that was one of the best trading setups I think I've ever seen.
When it gets in the lack of confidence in the ECB of the population, if it gets a feeling that parts of the costing of the financial crisis are more and more shifted to them. And the second question, as you are aware, the CEO of the Deutsche Bank recently said on a conference that if the ECB is continuing this...
See how much more is in it. So could have gotten at least one more.
Policy, it may lead or will lead to a destabilization or a collapse of the financial system. What do you say to this comment? Thank you very much.
Thank you. First, the first question. We certainly are aware of the side effects, the negative side effects on the people, especially in those parts of the Eurozone where the negative rates are being passed to corporate. So far as I understand, it's corporate depositors. And it's an increasing percentage of them that is actually doing so. So we are concerned. And part of the reasoning about this is, again, which has to do with the transmission of our monetary policy. Part of the reasons why we approved the tiering measures today, the mitigating measures, is also to try to soften, to reduce this transfer of costs to the borrowers. But we should be ultimately confident that with the recovery and the restarting of the anchoring of the inflation to our aim, the interest rates will go
so
up.
it didn't go more than that before bouncing back. That's interesting.
A necessity, and that's very important. And I think the trust in the ECB ultimately will be based on whether it's delivered on its mandate of price stability or not. It has delivered on a variety of fronts, as I said before.
Twitch, Jamieber 225. Yay, I understand that. Been reading that the demand on uranium is growing and only getting bigger. With only 52 uranium companies with only 7 producers, the supply isn't enough to fill the demand. And with countries building and turning back on reactors, I feel they are gonna need to get it from somewhere.
The second point is about the comments made that negative rates are clearly, it's something, banks would like to have positive rates, unquestionably. So whenever they have negative rates, they don't like it. But I wouldn't go as far as saying that negative rates will cause the collapse of the financial system, because before getting there, one has to look at other things of our banks. For example, the cost-income ratio. Many of our banks have cost-income ratios which are completely way off any average indicator, both in Europe and even more so in the world, if compared with other banks in the other parts of the world. There are certain structural weaknesses in the banking sector.
Well, they're
more
trying to buy
pronounced
it
in
here
certain
again.
parts of the Eurozone than in others. I think these sort of considerations affect much more than negative rates, banks' profitability, banks' capacity to lend. The necessity to adjust the business model to the digitalization, to the changes in technology, is something much more compelling than being angry about negative rates. Thank you.
Mr. Pellino?
Yeah.
Rino Pellino from Rai Italian Television. Mr. President, actually Germany is the country that has the biggest play role to make expensive fiscal policies. Italy, on the other side, is a country that would boost the expenditure, but has the necessity to consolidate the situation. How do you think that the package that you decided today can be useful for both these so different situations?
Well, I must confess we haven't discussed this side of the usefulness of our package for one good reason, that our package is not meant to finance government deficits. Our package would be in full respect of the treaty which forbids monetary financing. So our objective is price stability, and we want to deliver on our mandate.
So the question here is, do we actually believe him when he says that?
Would be more comfortable with the present package was not
What do you think?
Discussion today. Thank you.
Final question goes to Mr. Ewing.
Okay, here's the e-mini open. That's why they've got to end it.
Two questions. One on fiscal policy. You've obviously put a lot of emphasis on that today. Are you maybe sending a message to governments that it's their time to step up to the plate and the ECB is not going to come to the rescue forever? And then a related question. You may be aware of a paper that was published by BlackRock recently. One of the authors was Stanley Fischer, your thesis advisor, which called for central banks to start thinking about putting central bank money directly in the hands of citizens. And I heard your answer earlier to helicopter money, but if governments don't step up to the plate, isn't that something that the ECB needs to consider? Thank you.
Oh, that's an interesting question.
The first question is definitely yes. And the second question, all these innovations in monetary policy need to be looked at and studied and thought over. These are big changes in the way monetary policy works, and we have not discussed this. They may be part of this strategic review in the future. But at this present point, the Governing Council never discussed. You've seen how cautious we've been and by the way, and in the end, we decided not to change the inflation target for many years. And so now these are momentous changes in the way not only monetary policy, but the whole economy is supposed to work. Also, let's keep in mind all the times that giving money to people in whatever form, it's a fiscal policy task. It's not monetary policy task. Thank you.
Okay. I kind of missed what he said there, but okay. Yeah, if they started giving, I was having a conversation with somebody about this the other day because they felt that, well, they were going through the definition of GDP. And one of the things they were pointing out was that investment doesn't directly contribute to GDP. Which makes complete sense because if you counted investment, you'd basically be double counting things, right? Somebody would make an investment into a company, and then the company would use that money to consume something, to pay somebody, and then that person would consume something, or whatever, or they actually would buy a new facility or something like that, and that's where the GDP actually comes from. But that doesn't mean that there's no. I think that he was kind of taking it too far, and it just was just somebody that just read about GDP and didn't really understand it. But I mean, that doesn't mean that there's not a correlation between investment activity and GDP growth, right? Because in order to get those productivity increases that increase GDP growth, you have to invest. That's the only way that they make those discoveries, right? But his theory was that if you gave the money to people that were more likely to spend it, it would have a greater impact on the economy. And well, I suppose maybe it would on the short term, but probably what you're doing is you're just taking money from one sector and putting it in another, right? But here's the thing. There seems to me to be an imbalance in the market right now in terms of where the money is going, right? Like, it seems to me that a lot of this money that the central banks are putting out there is just going into trading and isn't actually making it into, real market. It's just being used to pump up commodity prices, and it's never making it to everyday people, where it could help them. And so maybe it's not a dumb idea to necessarily give it to everyday people. But when you do, you're still, even if you do that, and maybe it's a good idea, you still run the risk of creating a bubble, you know? Like, if that's really the problem, then what we need to do is we need to fix the part of the problem. Why is it that when we give central banks money, when central banks give the markets money, that they just put it into the trading, right? And what are the incentives to do that? And we need to address the laws and the tax laws and things like that that are encouraging the companies to just hoard it in the markets instead of getting that money more into the actual companies and people where it can be used for real investment to make productivity gains. Makes sense because productivity growth has not been good. So now that we've moved up, they're spiking again. Well, I feel like I got my +8 and that I should be done for the day. Well, of course, we'll stick around, but. So now that the ECB has embarked on quantitative easing forever, does the Fed need to do more or less? Bund offer emulating feels like possibly moving lower. I don't know what that meant, but this is a really odd call for me because we had a really good setup there, for sure, right? Yeah, that was just a beautiful setup. Should we talk about that setup again? I explained it before it happened, but I want to explain it again because the reason this trade excites me is that was exactly the reason why I had things set up the way that I do. And I've never quite seen it give me the golden setup quite like that. And it just kind of, the way that it came and played out so well kind of proved the theory behind some of my signals. So this is, you think of this as the interest of all traders based on them placing orders on the limit. And this is the interest of just the very largest traders. So like lots of 400 or more. And so you can see here when we were at the top, there was a lot of interest in the big orders. And that generally to me means that they are selling it, that they are doing a counter trade here. And then when we came down, you can see that we saw a spike in interest in all traders, but not really large orders being involved in it. And on top of that, we had a head and shoulders pattern showing up here. So what did we do? When it reached 07 and I saw an iceberg at 07, I took it short on the theory that the big guys had gone short. Retail tried buying the dip and is going to get blown out by the larger orders when they push it lower. And that is literally exactly what happened. Well, I mean, I can't say that that's exactly what happened, but we moved down like clockwork, and it was a really amazing trade. And I don't think it was 8 ticks, and I don't think it ever went against me. That was an awesome trade. Now that we're back, though, now that we're to the VWAP, and that imbalance appears to have resolved because there was some people exiting down at the bottom here. And the E-mini could be random. And then we add on top of that, we're 130 even is basically where we were yesterday. And the ECB did just say that they're going to quantitative easing forever, essentially. What is the reason for us to move down further, to be extending below the VWAP? I'm not quite sure I see it. But I am seeing a spike in the 10-year here on the bottom, suggesting a reversal, that we could go higher. But I feel like I got +8, that I should be happy with it. Unless, I mean, if we see another really, really golden signal, then of course to take it. GOP leader McCarthy, Dems have never gotten over the fact that President Trump won the election. Donald Trump retweeting that. You know, I think that this has a big application to trading. I was there was a thread the other day on Reddit about people that thought that they believe that they were an animal in another life or something like that. And I knew a group of people that thought that they were animals in another life. And one of them claimed that at a specified time that they were all going to turn into their true forms and, you know, kill all of the humans or something like that, right? Super crazy stuff, right? Yeah, lots of volume at 130, but that would be expected, right? Because it's a big number. Super crazy stuff, right? Well, of course, the day that they're all supposed to turn into their true forms comes and goes, and nothing happens. So you would think that that would be the end of it, right? That people would say, "Oh, okay, I was scammed. It's done. We're not animals in another life." Something of that, you know? But that is not what happened. He just continued to scam them. And one of the people that I knew had like a full psychotic break. And when I look at, well, you see it with Donald Trump in the election, but you see it in the markets too. It's like there's a theory out there, and something happens and completely disproves the theory wrong. To us, rational, you know, if you're a rational person in that particular situation, no duh, you should reverse. But the human tendency is you've invested too much and they stick with it. to the death. And that's where you're in a trade. That's why you have to set a stop, man. You're in a trade. It's going against you. It's already gotten to the point where your whole trade thesis has been broken up. Our tendency is to cling on to it. That's what we always do. It's just human nature to cling on to it. Anyways. Government orders Google to let employees express unpopular political views. Okay. I mean, they've pushed a good clip lower here. I got out at 03, right? So it looks like that there was another 8 ticks in it. If I was willing to sit through the 4 tick pullback. Which I wasn't. Anytime, I'm telling you, anytime that I try and hold it for more than 8, I get screwed. That was actually overextension on the upside. I thought it was a buy, but that was, look, it was near the top. So it could have taken that for a reverse. That could have been a reversal signal. I could have taken it out 3.5. And then gotten another 8 and been 16 on the day. Woo! That would have been great. Well, the trading is certainly, this past 2 days at least, has gotten better. Bloomberg, the threat for online poker players is not the human desktop card sharks playing against you, but the superhuman AI bots that could infiltrate games. Them robots. I was reading something the other day because we were talking about game theory. So I was looking for algorithms in rock, paper, scissors. Because theoretically, rock, paper, scissors should be random. But of course, it's not. People make their decisions based on how they've won and lost in the past, right? And apparently, there is a contest to make an algorithm for rock, paper, scissors. And there are these algorithms out there that have like an 80% win rate against people. Can you believe that? I really would like to understand how that algorithm works. How can you get that big of a win rate? Like when I read that, I'm like, I must be misunderstanding something because there's no way that a robot could win against you 80% of the time. Maybe like if a robot got a 55% win rate against you, that to me would be like really good. You know? How do they do that? That's crazy. Well, I can see in the tape some struggle here, but I feel like it's starting to turn into the thing from yesterday where now it's like they can sell through anything if they want. Like the struggle here would maybe indicate that it's a possible reversal, but I don't know how you can take that reversal. I think it would be much better if we really think that they need to move up because the ECB is being easy. Maybe we need to see it come up a little bit and pull back and then see buying on the pullback and maybe we could get in. Oh, you know what? I haven't been touching the news. At the bottom, let's do that. Let's make sure I understand the what was the other thing that I wanted to put in there? Okay. So maybe they did turn here. It's funny, the headline on CNBC is stocks rise an inch closer to records after tariff delay in ECB bond buying program, but they're pushing lows of the day right now in the E-mini. Man, and look at the liquidity is so low in the new contract that the Vista chart is unreadable. Some strong buying in Bitcoin though. I wouldn't say strong buying. Like there wasn't like a whale limit move per se, but kind of it looks like a gradual move up $400. Which I guess is only a 4% move, but still. Well, if we got back up, where would we want to see? Where would they be turning? Actually, it might happen here. Might happen at 130 even. Bounce and then 129.25 we come. You know, where does that put us? Possible swing, they might push down again and we'll see if they buy it. So Alligator kind of is on the same page with me. Wouldn't make sense for them to push below 130 much further than they already have, because then that would be like going below the ECB announcement price, which why would they do that? Would make more sense for them to bounce here. I'm not seeing enough of anything here though to convince me to get in. Zero Hedge tweets out, Draghi shoots a dud, Euro buns reverse on all ECB moves. Let's see what he thinks about it. For a few brief minutes, it was all going Draghi's way, unleashing lower rates, and QE forever sparked buying of buns and selling of the euro. Mission accomplished. But then the market decided to steal the gem out of Mario's farewell performance and reverse these moves entirely. And the euro is surging. Oh, let's check. The euro is surging. Yes, it is. They didn't break the high from the news, but they're there. And he has no thoughts on why. I'm a little skeptical. Like, when we look at this move, okay, they bought it. That was the ECB news. Some big guys clearly decided that that was their spot to get out, and they sold it. Okay. Then retail bought it and got burned. Okay. And then somebody went short here again for new low. I haven't necessarily seen them get out, but that might be what's happening down in here. So it could just be technical. Could just be technicals in trading that pushed it back down is the problem. So if we can take 130.010. It's a hard call what it's going to do. I mean, the thing is, so if I come over here to my ZN chart, okay, here's the move. how likely is it that it does this? How likely do you think that is? I don't know. Usually when you have a move like that, that's the impulse and that's done. You know? They come back to balance. It would make much more sense to see a move to the downside, come back up, and then maybe you could go up. Or maybe you see a move to the downside and it goes down like that. I mean, another thing that's interesting to consider is that the algo lover talks about he says that it's up at 130.25. So yeah. I don't think I have a read here. I'm just kind of going through like the range of possibilities about what could happen next and kind of feeling like the whole setup here doesn't entirely make sense. Oh, wait, what? AOC reveals she owes 19K in student debt, but earns 194K per year. How have you... All right. Nah, I have to rant about this. I do. You know it's coming. I have to rant about this. But I don't want this rant to be like a rant against Democrats. Okay? This is a rant against millennials. Listen, if you're listening to me and you're watching this on a desktop gaming computer, or you're watching it on an iPhone, okay? I mean, if you're in the library, then this doesn't apply to you, okay? But if you're a millennial and you're listening to this and you're watching it on an iPhone, okay? And you're not contributing something to your 401k, you are stupid. No joke. Straight up, I'm saying you are stupid. That is free money. That is free money that if you invested in the market when you are 60 years old, you will have money for your retirement. It will grow. It's tax-free. Most companies will give you a match on your contribution. That is free money that you're giving away. And yet, most millennials do not contribute to their 401k. So here we have AOC. She's in Congress. She's supposed to be a smart person, right? She makes, well, how much do congressmen make? She makes $174,000 per year. Okay, she's single. She just got this job. Before that, she wasn't making anything. The first thing you do is pay that debt off. AOC, you are dumb. You are really dumb. For real. Pay that off. Today. There's no reason to keep that debt on the books. And here she is saying we should do forgiveness. Here's the problem, folks. We did not teach our kids. Well, I can't say me because my kids are still in, not even 12 yet, but I guess our seniors by 10 and 20 years, they did not teach their kids about finance. Maybe they didn't know it themselves. But this is a real problem. And you guys, because you watch this, you all know better, right? So it's up to you to spread the word, right? You've got to save for your retirement, and you've got to keep your debt reasonable. Doesn't mean that you can't take out student loans, but like if you're going to take out a student loan, you need to do the math on it. How much are you going to make when you
YouTube,
graduate?
Dojo, the financial services industry does not want kids educated about finance.
I totally agree, Dojo. Well, I mean, It's not like they can. I mean, here's the thing, though. What can they do to stop you from being educated about finance, right? They're not going to go out there and create some program that's like, well, we need to make sure that our customers are educated, and so we're going to create this program that teaches them everything that they need to know about finance. And right, they're not going to do that. They're not obligated to do that. You know, but if you want to become educated about finance, you can be watching my channel. There's plenty of other really great channels that are completely focused on personal finance. You know, there's the whole internet is at your fingertips. You can read the original laws that create all of these things like your 401k. Like, there's every resource available to you today to learn the things that you need to know. I don't think that it's just a lack of education. I think that it's also has more to do with that people would rather just live and spend what they feel like today rather than actually planning things out. You know? Because you're doing a student loan, you just say, I want to learn about this, and I'm going to go and I'm going to get the student loan, and then I'm just going to figure out how to pay for it later. And, you know, maybe my industry doesn't make a whole lot of money, but I can still grow up to the top of my industry and you know, get rich anyways. Or I'll get rich on YouTube or something. Like, no, you can't do that. You have to plan it out. You have to say, how much money am I going to make when I graduate? And how much debt am I taking on in comparison? And does my return on my investment here actually make sense? Right? You got to do the cost analysis. Jeez. And then when you get a windfall, when you actually, you know, start making money, gotta pay it off, and you have to look at your budget and say, okay, I need to put a certain amount aside for retirement, my 401k. I need to put a certain amount aside to pay my student loans. And if you get a big windfall, put it towards paying off your debt or invest it. I mean, you can invest it too. But man, I just don't understand. How can you be making $174,000 per year? She only has $20,000 in student loan debt, which is not, compared to what some people have, is not that much. She should have already paid it off. So she becomes the example here, guys. You can't do that. Yeah.
YouTube Dojo. There is a lot of bad information out there masquerading as valuable information.
That might be true. So Dojo, what would be maybe your number one or maybe even top 3 pieces of bad information out there that you see that you think is incorrect? That you think that millennials are believing that needs to be corrected? Can we put a finger on it, or do we just feel like that there's just misinformation?
YouTube Dojo. Everybody should own a home.
Okay. It's a good one. I don't know if it's necessarily like anybody's going out there and saying that everyone should own a home.
YouTube Dojo. That's one.
But there's a belief out there where there's a desire that everybody should want a home, isn't there? Oh man. That's a perfect one to bring up because there was a Senate hearing about that yesterday.
YouTube Dojo. College debt is good debt. That's 2.
Yeah, you have to do the cost analysis. College debt is not always good debt. Well, I think it's even deeper than that any investment in education is always a good one. That's certainly something that people believe that I don't think is true. You could overpay for education. You can overpay for education. There are people out there that have spent a ton of money on education that is completely useless. But no, on the home thing, there was a Senate hearing yesterday about Fannie and Freddie, and they were saying that they've spent, like what, $19 billion of U.S. taxpayer money to shore up Fannie and Freddie, and the amount of assets that Fannie and Freddie has compared to the amount of loans that they have out there is still
YouTube,
ridiculous.
Dojo, you will earn big bucks with a woke studies major.
Jeez, yeah, right. Anyways, the health of those financial institutions is no better than it was during the financial crisis. And all of the Republicans were like, well, how can this be? It's been so long and you guys haven't done anything to fix things. And what do we got to do to fix it? And the administration and the people that were testifying, kind of went through a plan. And what did the Democrats say? Well, but this would result in less people owning homes. Yeah, not everybody can afford a home. Wow, something happened. Okay, market realizes ECB can only do quantitative easing for 12 months. So that moved down so quickly that my DOM could not handle it. Wow. I could probably just click sell anywhere in here, but because it's so screwed up, I don't think. Holy shit! You see that 10K at 29.5? Oh, I could just click anywhere in here. Man, too late. That's insane. I've never seen that. Trump advisors considering interim China deal to delay tariffs. No. Nah, I got scared out. This is insane. Okay. Of course, I shouldn't have touched it. Where did that 10K offer come out at? Holy crap. It's a little too wild. But I'm gonna try and play it. Right. Market pricing in an imminent China trade deal for the 365th time this year. Man, it keeps going up on me. Okay. Really? Okay, I don't know what I just did there, but I think I'm going crazy. I'm going crazy. When I saw that 10K, I should have just clicked then, huh? It's like, oh, probably won't, and then let it go down and I get in. And,
YouTube, Tyler
and now
Kopp,
I'm in
what's he
this.
trading right now? No be here.
We're trading 10-year Treasury futures. Well, that was just about the craziest thing I've ever seen.
YouTube, Tyler Kopp, oh. Thank you.
Yeah, no problem. Okay, so they're pushing down, but there's just a lot of really wild volatility in here. Can only imagine trying to be one of these people over in the new contract on the micro ES. Good grief. Thing is, the market has a way of sussing out this sort of a thing, so there's maybe some people might have known, and that might have been why they were selling. All of these clicks that I'm getting are actually like 16 ticks out, so interim deal with China. Man, come on. Shit. Okay. Well, I think you got to be. We should have been a little bit more careful in this kind of action. I got a little excited there for sure. But you know that it's going to move around really randomly and a lot. And you kind of have to be careful about the shots you take. I can't believe that I got taken out there like three times in a row. That really sucked. Is there maybe some skepticism about this headline? Or is it just the profit taking? They're definitely going short here. They're trying to hit it and it's not quite going yet. Yeah, like that. Like they've almost equalized the volume. I'm not quite sure. I'm seeing, I mean, the big orders in particular are very interested in this spot.
YouTube, Lewis Lee, brother, it seems that the emotion is out of control.
Yeah. Well, the emotion on the market is out of control. What happened to me was I sat down and I was too skeptical of it. It was like it was going down and I was like, well, I don't know what's going on. I don't know if I should click. I'm already good for today. But then it was like, well, all I have to do is sell it. And by that point, I was like way too late. So then I've been trying to scalp like super tiny ones around here, and it just didn't work out super great for me. So I took a couple of little losses. That wasn't too bad. Clearly having trouble getting past 23 even though. Okay. So they're going to try again. Nope. They hit 800 and it absorbed again. Man, this chart over here in the E-mini is wild. Trump aides considering would delay and even roll back some U.S. tariffs in exchange for Chinese commitments on intellectual property and agricultural purchases. Okay, that would be a really positive deal, for sure. Okay. So even though there's some pretty strong bid icebergs, you're getting some sell sweeps too. Is it 32 to swing down? That's nuts. So. Come on. You can do it. I believe in you. Oh, come on. You're killing me here. Ugh. And 14 at 23. Why would you want to buy there so bad? Well, maybe you're just trying to get out. Expect a huge rally until Trump tweets he's actually increasing tariffs. Okay, well, 23 can go offer now, but it's still not, they're still not going into 22 and half and pushing through that one. There it goes. Yes, but in my opinion, bulls win in the end after absorption selling there. That didn't quite make sense to me, but okay. I mean, the thing is, even though that 23 is fighting super hard, they get literally nothing on the buy when it ticks back up. This could just turn into a slow, painful death for it. But they're going to take their time. Can you imagine if we had held that original short? Can you imagine? At 27, at 07, that's 14. And then, let's see here, 7, that's 14 again. 28 ticks. On ECB, they think the problem/focus is RLTO limits are unchanged, which makes QE almost useless, limit reached. So need for an adjustment, but some members' countries disagree. We are seeing more and more tweets and reports that suggest there really is some movement of Irish backstop issues on Brexit. That would also be bullish. Well, that sucks. Where did I initially start trying to take stuff? 20 half? Yeah. That was dumb. Oh well.
YouTube, Lewis Lee, you need to stop.
Well, listen, it's fine. There's no problem. Big single trader hesitated. It's 8:30. I think we can go for another 30 minutes, but I'm
YouTube,
not
Lewis Lee, take a break.
I'm not taking them live, obviously. And I am getting, I mean, I was trying to play the price action, like the really quick moves. Obviously didn't do a very good job. Now they're kind of getting back into my kind of a spot. I would still like to see a trade here. I think though, going back in it, when I saw the 10K order, should have sold it. Should have sold it. And then watched all of this and been like, okay. Right there. It's interesting that they that 23, why they hold that so aggressively. I've never seen something quite like that. Talks are ongoing within Trump administration, but sources tell me there's a clear preference to find an off-ramp before the December 15th tariff escalation. This would be the first time the White House rolls back duties on China's Sochi's IP commitments need to be convincing.
YouTube, Luis Alarid, very volatile day markets still digesting news, my guess.
Yeah, well, and you get this sort of a thing where it'll go against you and go against you and go against you, and then by the time I'm give up or have reached my limit, then the down move that you want actually happens. So the thing that sucks, I had a good winner earlier, and then in all of the crazy me trying to catch a down move, um, I lost that, and then that last trade gave me a little loss. So that's where I'm saying, okay, it's even. I could still take one more, and I only say one more because of the time of day. It is fighting me, isn't it? But it's
YouTube, Luis Alarid, been trading since 4 a.m. PDT, caught good moves in Koreances.
And there's been a lot of. Today ended up being a much even more significant. Can you imagine, like, you were expecting it to be a significant day, and then it ended up being 10 times more significant than you thought it would be? Oh, man. I think what we're getting here still is the robots or whatever. They were all already short. Because look at this. There's some clear large activity coming in here. And those guys, they like to get in on the edges, right? So you have a really good probability of a reversal. You have a really good probability of a reversal. But they will always make it difficult. Like, they're going to stop it out first. You can see that Bitcoin has started to sell a little bit. Okay. Well, that sucks. He's clicking a lot again. The liquidity is closer. Huh. Never seen it look like that before. This is definitely different.
YouTube, Luis Alarid, not trading S till break of 3020.75.
Really? Wait, is that the high? It's not the high, but... So you're getting this thing in Treasuries again, where they're leaning on 23 for some reason. It's a big stack there now, too. 23.5. Alligator says, well, imagine you could have been long. Yeah, that would have hurt. Okay. Well, they did finally break 22. Ooh. Now they're doing this kind of game, huh? Is the E-mini going to spike up here? I think this would be a good spot to try and buy it if it was, the liquidity wasn't so screwed up over there. Look at the 30-year. The 30-year.
YouTube, Jake, S&P is gonna make new ATH.
You think that it'll make a new all-time high today? Let's see here. What is the all-time high? 30.2850. Yeah, you might be right. You might be right. That's crazy. This is just like last meeting, though, right? It's like, can the Federal Reserve really reduce rates with the equities at all-time highs? I don't know. That kind of suggests to me that you've infused too much money into the markets and that you're creating a bubble. That's what, you know, cutting rates at all-time highs suggests to me. Easily some of the wildest moves I've seen in bonds. Seems to be what they must be waiting on. Trade war, ceasefire, trial balloon, and S&P can even rise 0.5%. Yes, this is curious, isn't it? We were at 3,000 before this, and then the move came, and they moved about 20 points. Now, the Treasuries moved big time, but equities did not. What does that mean? I think it might mean that equities have already priced in a lot of the trade war might be over, and the Treasuries have not. So we're still awfully high here in the Treasuries. We're awfully high. There's an iceberg here at 23.5. Under Senator Elizabeth Warren's new plan, those who earn above $250,000 would have a 14.8 Social Security contribution evenly divided between employees and employers. What? 14.8%? When you add that on top of like everything else that she said, like, do you even make any money at all if you make over $250,000 a year? This doesn't sound like a serious proposal to me. This sounds like red meat sort of stuff. That's interesting. I feel like that the E-mini is consolidating and is ready to just take off like a rocket. But It's not doing in much. There's 2 ticks down in ES, or sorry, in ZN.
YouTube, Jake, same.
You noticed why my propensity to misstate which instrument I'm talking about? How often do I have to correct myself and say, no, I meant the 10-year, not the 5-year, and vice versa?
Twitch, Dojo 2022, don't worry, the government will keep your money safe for you.
Yeah, right. No, they're going to take all of it. They want all of it. Elizabeth wants all your money. I don't think people realize how much, okay, now equities are actually selling really hard here. Suppose there could be more news, but it might also be a trap. Wow. Now they're below the open. Someone just puked hard. I'm not sure how to even begin starting to make sense of that. Ooh. Trump administration absolutely not considering interim China deal. Oh. Oh, man. Where do we got to get back to? 130 even?
YouTube, Amini Trader, bunch of jokers we have in office lol.
I mean, was it really the administration's fault? Okay, look at this. Big order at 30. Oh, right here. Oh, come on. Don't be stingy like that. You know you want it. Cool. Finally did it, guys.
YouTube, Amini Trader, I wouldn't try to swing trade the S today.
Right? I don't know. I wouldn't try and swing trade it, that's for sure. Oh my gosh. That's just crazy. Well, I'm glad that it all worked out that way, for my sake. Not because on sim trading that I ended up positive on the day, because honestly, there was a lot of stupidity in there for sure, right? This one went 7 ticks and I didn't get anything out of it. This one went 7 ticks and I barely got anything out of it. These 3 in a row was pretty sucky and all this, and I did it by increasing my size. But the thing is when we got this up here and I saw that 10K, I was like, oh well, you could probably sell it anywhere, but I'm already late, and I just felt frozen, and I should have just, I don't know why I was so scared, but that was dumb. I mean, it wasn't dumb. It was totally a natural thing, but I know better. You see something like that, just fucking sell it. There's no reason to be scared. If you get stopped out, you get stopped out, but the risk reward on that one is so tremendous. You've got to take that one. And then, trying to chase it was dumb. But then the piece of news that made this happen reversed. And that time I knew what was happening and I sized up and made it all back. So, but you know what, guys? Just if you're watching this on replay, just ignore everything else except for the first trade, okay? The first trade, that was an awesome, that was quite possibly my favorite trade of all time. Quite possible. That setup was so beautiful, and our read and the spot and everything about it was just perfect. Now this other stuff is just kind of like, what do we want to call this? You're just taking shots on the dark on the knowledge that you're going to get an outsized winner sooner or later. There's not even, I mean, there's a little bit of a read there in it and everything, but man, it sure turned out interesting though. Okay, I gotta get going soon. You guys have any thoughts or questions before we get going here? I already posted my notes, so I can just turn it off here. But here at the top of the hour, I need to turn it off. I'm not sure. I might actually stay home today because my wife is really sick. Speak now or forever hold your peace. We'll definitely be having some conversation in the comments on this video, But I'm embarrassed about some things, but hey, if you're positive, you're positive, I guess. This whole thing is just crazy. This whole thing is crazy.
YouTube, a mini trader. How's the real estate market in Utah?
How is the real estate market in Utah? So I've been looking at real estate and it's okay. I would like to buy a duplex, but I need to look into
YouTube, a mini trader. Thinking about moving near.
Well, there's always, it depends on which side of the market you're on, okay? If you're looking for, a house and you're like above $300,000, then I think that things are kind of on your side because there's not as many, it's kind of more of a buyer's market. Whereas if you're looking for smaller houses or townhouses, it's like there's just not enough of them. So that's what you're looking at. But, I think it's a really great place to live. So I don't think there's anything about the real estate market that would keep you out. Okay, well, anyways, I'm going to have some thoughts. Come back and check the comments later today. We'll talk about it. But I think here at the top of the hour, I should shut down and get going. So we'll see what happens between now and tomorrow.
YouTube, Luis Alarid, 300K buys nothing in Los Angeles.
Yeah, that's it. That would buy you nothing. My house would be like $1 million in Los Angeles or more. Okay, anyways, don't pull me in. I'll see you guys
YouTube,
tomorrow.
a mini trader. Living quality sucks in Le.
Yeah. In the meantime,